All right. Hi, Mark. How are you?
Doing well, Bryan. How you doing?
Good. I got something to tell you. It's going to be a little interesting. So I think people need perspective right now. The 8-year annualized return for Bitcoin through the end of January is 33%. Okay. Mm, eh, it's actually not that bad. Over the same time period, the S&P 500 and gold are both 14. Okay.
Really?
So you're looking at, 2.5 times that. A little more perspective. That means your money's doubling every 3 years with Bitcoin. It means that your money's doubling every 7 years approximately in the S&P 500 and gold. And this is in like basically a bear market in a massive pullback. I
Yeah.
mean, you know how much better the annualized return gets when this thing starts going back to new all-time highs. So I think everybody needs to like pump the brakes a little bit here. Our clients do a great job of backing away and having perspective. But I mean, when I looked at the numbers and I thought about it this way, I was like, this is still an amazing asset in a bear market. So
Absolutely.
I think
And I,
people,
I think that time horizon you're talking about is fair enough because it's long enough where folks can get a perspective across different cycles, obviously relevant to the DAiM Foundation. But comparatively, I feel like there is a disconnect in people's mind on how severe where we are in the cycle. Some of this perception issue, media, but I think it's a great observation. So glad you
yeah,
pointed it out.
just back away. Leading to price, Mike Novogratz with Galaxy. Uh,
Yeah.
Last year, he said he processed $1 billion seller. Yesterday, he now says this was a $10 billion seller. Um, yeah, and then he said the guy wanted to buy a sports team. Back then, they said it was estate planning. Um, Either way, that's a big seller in the space. I do think that led to some copycat and follow on, which is dried up. I think from him and looking what he processes and who he knows. He talks about his fantasy football league that basically has 25 to 26 of the brightest, biggest asset managers in the space. Dan Druckenmiller being one of them. And
Wow.
they've been running this for 25 years. And, he also said that those guys as macro investors have a position in Bitcoin. And he said he himself is starting to dabble back in. Now he's not the end all be all. I,
Sure.
I reference him because somebody came to him to process this large sale. Right. And so for him to say, basically that's subsided and that he thinks the bottom is in, I mean, he's getting front hand, market color right into what's going on besides what we can see in the blockchain. So I think there's some good things to come. Maybe just time pain, as we're going to talk about in our most recent letter. Something interesting yesterday. I'll tell you how the day started, which was kind of unique. That we do payment processing for automobile companies, and then we started some
Yep.
donation stuff. What? Actually, it's worth telling the audience now. Mark Hall spent some great time at Google and at Sequoia and has been helping me out in the business and some of our clients just come up with the best product that we can to help people build wealth in the space. And so that's why I'm here talking to Mark. And we kind of have a business growth weekly call. And I think we might turn this into just a quick 10-minute chat for everybody else to hear, front of the lines of what we're thinking. And Mark's been in Bitcoin a long time and knows the space really well. So a guy like pinging stuff too to make sure I'm correct in what I'm doing. All right. So
Understand.
yesterday, Place of Hope. It's a charity organization here in Palm Beach. Basically, they have housing and schooling for foster kids, right? And it's a great organization. I got introduced by Eddie Welch. He's a guy that we do some estate work with for our clients when they need trust built and asset protection. And we are going to be the processor for them to take crypto donations. And so really exciting. Yesterday, I did a live demo and I made a donation on behalf of DAiM to the organization. And it's just great because now they have something else that they can talk to donors about, an exciting conversation and something that can grow as an asset class because they will consider keeping some of it long, which I found interesting too, instead of just going right to cash in the asset. So they're open to having this investment plan. So that was exciting. They had a great lunch there. It was in West Palm Beach, like top floor BNY Mellon office, and great view overlooking the intercoastal and the ocean. And then from there, I left and I went to the World Liberty Forum, which I texted you from.
Yeah,
and
that's incredible.
a little last minute. I thought I was going to need somebody to boost me over the wall, but I got taken care of and I got brought in. But what I found interesting on this and listening to several panels was Bryan Armstrong, and he's, you know, so focused, so many events, right? Like he just commands the room, speaks elegantly. They have a long-term roadmap, and you can really tell that he's pushing. And the base layer stuff, I think, is going to really, if he gets what he's designing out of this as a global access for finance, right, for everybody, where there's not the big banks in remote areas of the world. And I think that leads to some big adoption. And it was pretty impactful. You know, a lot of these forums, events, conferences, it's the same old thing, you know, promoting the product. It's a lot of the space is very transactional, just looking for the trade. You know, for us, you know, in our audience here, it's about building wealth and protecting it and saving on taxes. But I think when this all ties together and what he's looking to do, you know, it's that new narrative for the asset class, right? What's the new story? I want to ask your opinion though when we were coming to this, because we wrote in our last letter that we may not need a news story. It's just supply rotation, right? Like demand for the asset. That annualized return might wake people up again. Do you think it would matter, give clarity or help the space if we knew exactly how many units of Bitcoin the US government still has in its possession?
I think that's a great question. And before I directly answer that, just two quick comments on the prior points you made. One, it's incredible to see you partner with organizations that are doing good and using Bitcoin and the opportunity set to drive forward their stakeholders. I think that's amazing. And two, in terms of the event that you attended, after, would love to hear additional color because I would imagine it drove some optimism and bullishness from your side as well. To your more direct question, Bryan, yeah, clarity and transparency, always important, always a key driver in terms of getting new folks into the ecosystem, driving confidence and conviction around where the federal control in terms of what they have under their control in Bitcoin holdings. It drives at minimum confidence that they know what they're doing. They have the key processes, workflows, compliances in place to manage and measure that, which we've seen time and time again is not always the case. And I think it gives some clarity around what next steps might be for larger entities. I'm of the same belief that we're at this interesting point where the asset class is really about to grow. I think, unlike a lot of folks understand, between retail, which will continue, institutional, sovereigns. I think we're seeing the early steps of that, and having a large entity, at the federal level, just provide more confidence, transparency. I think is a net positive, and I think it'll pave the way for other similar entities to move forward with a little more conviction. So I think we're likely to see it at some point, is my hope. But even without it, frankly, I think Bitcoin is still heading on the right track.
Yeah. I was trying to think. At first, I was like, we need to have it. We need to know. Because for America, the United States, to be the global leader in cryptocurrencies, blockchain infrastructure, AI, well, it starts at the top, and it's accountability. And yes, we had the Genius Act. We're waiting for the Clarity Act. But it's funny, it's clarity, right? Like where is it? And so I think if we end up finding out the exact amount, and even if it's a much more reduced number because of a prior administration and what was going on in the sales there, I don't think it would move the price if we find out what it is. I think it's just a stance, and maybe they don't want to know because of OPSEC, but I think we're in a day and age where we need to show that we're confident about the number of units that the United States hold and that it's very protected, like our borders, right? So I think it's a little small step that should be done. It's not tangible, but just be nice to do. Show it's locked up. That's it. Tie it up. Put it out there. And that way, if we do add, people can have the direct accountability to seeing that account. And if they want to break it down into several other wallets for asset protection, totally fine. You can map, you can revolve those, you can have them report back to a central UI where everybody could see it, and that way the wallets are protected. But I think something like that would be great to see. out of all this.
I agree with you on both points. You bring up really interesting highlights. First and foremost, unlikely to move the price, but by nature of people in the Bitcoin ecosystem, transparency matters, right? The
Right.
blockchain, I think, is valuable for a lot of reasons, but that transparency is inherently part of the culture and DNA. But that analogy in terms of borders, and I think we're at a state where folks really prioritize that stuff, right? When we think at the national level, we want to have certainty. And this idea and this conversation around proof of reserves, we've heard it within the corporate space as they adopt, digital asset treasuries. It's not unreasonable to have the same expectation at the federal level, again, just to drive more confidence. But fully agree that it wouldn't necessarily be a needle mover. It would just drive more conviction that a large player like the federal government knows what they're doing.
Yeah. And people still have a bit of that, oh, what if I lose it? Or, what if I'm victim of a hack? Or what if an exchange, there was block fills that has some rumblings. Unfortunate, because people should be doing their due diligence and see if there's some kind of license. And that's a whole nother topic that we've gone into in the past and will continue to go into, that we're on the other end of the spectrum, very qualified. Yeah. But when it comes down to people's belief in this is, hey, these are the United States can say, hey, these are the units that we have. They are protected. You can own the pure asset too. And if you do it the right way, it's safe. We are leading by example. And that may also help some of the quantum compute FUD that's out there as well. Hey, we are confident enough that something will be done in the space that we will hold these. This is how many we have. We will keep track of them, and you can do the same. So yeah, it's just a little touch there. Back to World Liberty Fi and the World Liberty Forum. I watched the panel with Eric Trump and Donald Trump Jr. Talking about where they're going with this in business. And we've seen them come through the stack, really. Like, they have mining. Last week they announced an exchange in the Middle East. They have now the stablecoin aspect, which, as we know, buys treasuries underneath. It's a great yielding product back to them. That's got $6 billion, I think, in total valuation of value in that stablecoin in USD1. So it's expanding. ABTC now has 6,000 units of Bitcoin. I mean, very bullish stuff. Now there's more sectors in the space that they could dabble into, but from the attendees there, DJ Saul was there, the CEO of Goldman Sachs. I met Dan Loeb, although we only talked about surfing. What's funny about conferences and events that I realized is that a lot of people feel like they have the right, because they paid, to just kind of, hey, real quick, like you're having a conversation with somebody, and then like two people will come like, hey, real quick, like as if they're gonna leave and let you resume your conversation, but they don't. They just really ruin the momentum of something. And Dan was so cool. He was like, I got a place in Miami. I probably give him some of his personal stuff, but he likes surfing, and he's looking to be around a bit of the surf here in Florida, which is a very tough thing to do, which I know a lot about. But we started to get on that topic, and then somebody came in, and I was like, come on.
It happens.
It does.
Let me ask you this, Bryan. When you're in a room with impactful players in the industry, you mentioned Goldman being an example. These are entities that, historically, if we look back further enough, there's reluctance, hesitation, a lack of conviction around kind of the digital asset space. Obviously, more recently, we've seen a turn both, within the political sphere, but also within the institutional corporate world. What's your sense on not only sort of the speed and velocity of that change, but also like the degree of that conviction where it sits today around whether it's Bitcoin or other, digital assets? How fast is that change occurring, and how palpable, how real is it based on folks in the room, conversations you're having?
I feel like the resistance comes from, and this is in the traditional banks, and I'm speaking on the whole group, and obviously sure, there's some in there that customers bank. There's banks that come into this and want to do it, and they're being proactive. But like, looking at the overall space, as much as we hear this and that, it really feels like they're just reluctant to let go of fees. There's so many fees laden in traditional finance. And that's a lot of what World Liberty Fi claims to be doing is cutting out the middleman and making modern finance and investing a lot lower cost and more accessible to more people. I believe that. I mean, we're a pure crypto asset holder here. There's not a carry cost. We don't have a prime broker, asking us to push some kind of structured note to our clients. Morgan Stanley, they had so much demand to get into Bitcoin before the Bitcoin ETFs. They could have worked their way into getting them pure Bitcoin, but instead they created a fund structure with a really high fee. And they just don't want to let go of this stuff. And that's what DeFi does. And that's what Bitcoin does. It really undercuts. And that's actually, I think, the number one hang up with the clarity. Well, I mean, it's out there, but like in reality, it's that stable coins, it's a reward, right? Like, we're playing around here, prediction markets, it's gambling. Like, but in reality, are they going to have to cut a deal where the reward is half and you still got to go to a bank to get the full 3%? I mean, that'd be pretty terrible to see. That's not innovation. So it's, to me, it's pure fees. They understand the jobs, like how powerful this space is. DeFi, smart contracts, blockchain, accountability. This all works very well under the hood. We do a lot of this here, testing, using that's in. I don't know what's going to get them to change. Their clients grow with them, not only in age, but in assets. The clients are used to the traditional products. They're just going to insert a derivative of Bitcoin in it. I don't see a quick merger, which is actually good for Coinbase, Gemini, our business, right? Like, because the asset's going to grow in price. We're going to have edge in returns. We're going to have edge in fees. And so that's really but we always need a challenge, right? Like, if this was just wide open and easy, it wouldn't be fun. It wouldn't be pioneering. We'd be looking at probably a smaller annualized return. So yeah, I think that's, I could just feel it. Like, that's what it feels like. And that comes from me working at broker dealers and understanding where fees are, and stuff like that. So.
I was just going to hit on that. I think the reason DAiM has been so successful, but also you're able to bring an authentic perspective, is you've come from that world and you've lived that life, but you've also been ahead of the curve in not only the founding of DAiM, but talking to customers and sort of having a shift in how you think about, not only the financial services market, but like what real value means to the client. And then you're right, there's clearly still a disconnect, but as we move closer to the world where it's so blatantly obvious the value of assets like Bitcoin in the return profile, I think it's going to bode well both for the DAiM business, but also I think for the population at large. And Wall Street's either going to be playing catch up at that point, or they're going to adopt, and in both cases, net positive for all of us. So yeah, appreciate it.
I'll wrap it up with this. Yeah. They're going to be playing catch up. They always will, because there's an older generation that still works at those banks that's just hooked on that coupon. They're going to resist the change as much as they can. And unfortunately, that's going to be at the detriment of their client, who could have a better return in the better asset. I mean, it's that simple. All right, guys, thanks for listening to this one, and we'll see if we keep this going. I think we are. Thanks, Mark.
Thanks, Bryan.